So as it gets recorded, and the recording's now, so welcome everybody to today's Insight Hour. Yeah, housekeeping. All the Insight Hours they all get recorded. I'll post the latest one in the Discord, and I generally send out an email with it too. But they could all be found in the dashboard. You just go into the community section, and there's a long list of all the Insight Hours, the dates, and whatever the general topic was. For this one, Eddie is going to give us a presentation of his psychology. So he's been working on this for a little while. I think it's fantastic. I'm really looking forward to everything that Eddie has to share with us today. So, Eddie, well, why don't you give us a little bit of background on what made you decide to present this? Why this? Why now? And maybe a little bit of your background as well before we jump into the slide deck.
Yeah, absolutely. Thanks, Mike. Andy and Andy, thank you so much for tuning in. And this is a really important topic for me. In my opinion, it's the most important, albeit maybe the least sexy part of trading, but it's absolutely the most important aspect of it. From what I can tell, I just entered my 5th year anniversary and as a trader.
Congratulations.
And thank you. And I now treat it like a business, which is very important, which I'll talk about. But mindset is so critical. I mean, obviously Mike agrees with us. He wrote a book about it, of course, in the Trading Mind Wheel, which has a ton of mindset aspects in there, of course. I'd recommend that book to anyone. And I think once people understand it, and I'm speaking just from my perspective, and I do want to preface, I'm not a professional by any stretch. I have a long way to go. I'm very humble in that regard. I'm always just trying to learn and have a growth mindset. And people like Mike and his book and others, which I'll talk about, have been influential to me. But I think once a trader understands that it's 90+% of the formula, and you embrace that, it becomes a game changer. At least that's what's happened in my regard. So I just want to share with you guys, 10-15 minutes of my thoughts, sort of my journey through psychology, some of the things that have worked for me to make that a key component of my success. So I just want to share a few slides with you guys.
All right, cool. Thanks, Eddie.
So, yeah, we'll get going here. Hopefully everyone can see it. Everyone can see that?
Yep.
Awesome. So as I started, again, from my struggle standpoint, I think I've experienced most of the emotions when it comes to trading. Just to name a few, confirmation bias was a big deal for me starting out. Recency bias, FOMO, revenge trading. I've gone through the gauntlet on that. Not fun, never fun. Hopefully I've scrubbed that out, but can't say I am human. So that might happen to me again, but just about all the emotions I've experienced when it comes to trading. And by the way, I don't know if anyone's ever heard this before. I'm sure Mike has, but there's also JOMO, which is the joy of missing out. So I think, Mike, in a recent trade, it was on the action list, but you ended up not taking it. And we can be happy that we don't take a trade that's not meets our criteria. And we can actually build a lot of confidence in that and sort of put it in our emotional account rather than a bank account. So I think JOMO is a really cool concept too to embrace. So that's just something I wanted to put out. So mindset, 90% of the equation, I mentioned that. I actually think it's closer to 95+%. And it's funny, just recently, I started recording my trades, my voice, the charts, and how I'm feeling during the trade. And I journal a lot. Obviously, Mike talks about journaling a lot as well. When you go back and listen to your actual trade that you're taking, or you're actually looking at the charts before you execute a trade, it tells a lot about where your mind's at. And I think that's really helpful. So I'd recommend any type of recording device. I mean, there's plenty of free ones out there. I just use the snipping tool. I'm a PC guy. Obviously, you have QuickTime if you're an Apple person. These are free tools that you can use and record your what your mind is telling you before you execute a trade. So on this, I can be an expert technician. We all can, presumably, we all can read a chart. We've been taught really well. But if my emotions get the best of me, it doesn't matter how well I read a chart. Like every day of the week, emotions can take over, and it doesn't matter how much technical analysis you really know, because your emotions can literally just get you out of it in a matter of seconds. I didn't understand this initially. So just like presumably a lot of you guys, I wanted to understand price action. I wanted to understand candle patterns and bullish and bearish patterns and continuation patterns. I want to make money quickly, just like presumably we all do. So I ignored mindset probably for my first 2 to 2.5, maybe even 3 years. I heard about it and my mentors told me about it and I read a ton of books about it, but it didn't click to me because it was just all about reading charts and chart patterns and price action and hearing this tip and everything else. But eventually it's going to come back to mindset. I can just about guarantee you that. I'm sure Mike can maybe back me up on that. If you realize how important you're going to eventually realize how important trading psychology is to the success of being a trader. I think that's really important to understand and to appreciate. And it's totally normal for you to go into this just wanting to understand chart patterns and reading charts and ignore the mindset. Because like I said at the open, it's sort of the least sexiest part of trading. I wanted to share this aha moment because this concept, even though I heard it, and this was mainly out of a book called Trading Mindfully from Gary Dayton. And it's really, really important. And this, for whatever reason, I heard it a few times over the last 5 years, but it just recently clicked to me. And I wanted to share it with you guys. Inherently, as humans and the brain that we have a loss aversion, meaning we don't like to lose anything, whether that's in life, whether that's an asset, whether that's obviously a loved one. I mean, we just have this aversion to loss, and it's very applicable here in trading. And a lot of times, and this has happened to me, and I've struggled with this, we cut winners short, right? Because we just have a little small win, even though the charts tell us, hey, there's no reason to get out of this trade, but I'm going to cut the winner short because I just want to take my little profit because I have that fear of losing money. And the flip side of that is oftentimes, or at least, again, I'm speaking for myself, but I know of other traders that have experienced this, we'll double down on our losers. We might even, the trade's going against us, and we double down either in the form of we ignore our stop, which protects us. I actually call it a protective stop. It's like putting on a seatbelt before you drive the car. You have your stop there, and it's there for protecting you. Or we move it, we take it off, or we even sometimes double down the position. Why? Because we don't want to realize that loss because of our aversion. So from a small winning trade standpoint, I call these bird exits because how a bird eats, right? They just peck a little bit at food. It's like just a little bit of a bite, and I just get the win, and then I'm done. So I don't have a chance to lose. Well, what happens to me is I'll do three decent trades at 1, 2, 3%, which are, and the charts had no reason for me to get out of it. And then I'll have a big loss because of this reason I explained, and it'll take away all those gains that I had. And what that does, of course, is destroys my confidence, which I'll talk about in a second. So our brain inherently wants to protect us, and it wants to almost do the exact opposite we need it to do in trading. And so for me, I didn't really realize that was happening, and I'm almost having to retrain my brain to think differently when I'm in a trade versus when I'm just in my everyday life or I'm running my business, for instance. So this is what makes mindset so important, but at the same time so difficult because it's hard to do. We're fighting that natural tendency of what our brain wants to do, and by nature, it's just the way God has built us. It's there to protect us. So I think that was an aha moment for me, and I think about that almost daily in my trading. About that concept. All right, this next one is, I think, is very important to have a strong why, because it can't just be about the money. I think of course, this is the reason we're trading, because we want to make money. Obviously, I think anyone who tells you otherwise, I don't think that's necessarily fair. But money is the result. It's not about thinking about the money all the time. There's a process, right? So I think if you have a strong why, then that helps drive you in making the right decisions and really working on your mindset. Almost, you need to have a purpose, really. So, for me, it's not about financial freedom. It's about freedom of my time. What can I do with the hours that I've been given on this, this short time I'm here on this earth? What can I do to focus on really what matters to me? I have 6 main things. I won't share them all with you guys today, but one of them is for my wife and I to create a foundation to talk just about this, to talk about how precious our time is here on this earth, and how we should, how we could have certain things and activities and processes to use it wisely on the hours that we're given. So for me, it's about time freedom and what I could do for my family and my friends and for other folks in need. And of course, the resources that trading will give me will help provide that. So I think the why is super important. That's exactly right, Caleb. I mean, that comment, I could not agree with that more. Even the wealthiest people in the world on their deathbed, they're not saying, "Oh, I wish I had more money," right? They're saying, "Man, I wish I had more time." You're 100% right. So here is a formula I want to share with you. Patience and discipline equals confidence. These are the 3 characteristics that I have found the most valuable in my journey. And my confidence is the most important asset for me being a successful trader, and I will guard it at all costs. How I get confidence is through patience and through discipline. And I'll share with you guys a couple of sort of mantras around that. If one of those variables, just like in a normal formula, isn't correct, then it's going to somehow adversely impact my confidence, which is a problem. So what I do here is we have this concept of stacking bricks, and brick is not an acronym, but it's just think of an actual brick. And I actually have, some Legos on my desk of little bricks that I pile up. But it's about a proper entry, right? Based on your rules, your strategy. It's an intelligent exit, right? Based on what you're seeing and your plan. And you're executing those 2 things all according to the plan that you have for that trade. And Mike does a really good job in his playbook and through these calls and Discord, the community that we have, to really talk about his plan for any given trade. So when you're doing those things, you're stacking those bricks, which then really builds your confidence, right? So when I go into a trade, and I will be honest, I'm more of an intraday trader versus a swing bigger chart trader. I'm in my mind is saying, I just want the brick. Don't care about the result because I'm all about probabilities. I just want the brick. That is where my mindset's at. So it's about process and not just looking at that P&L during the trade. Treating it like a business. This is super important as well. I think to track your progress, like for instance, what Mike does with his playbook, I think is really, really important. The bottom line is if you treat it like a hobby, you're most likely going to get hobby results. I understand that a lot of people don't have the time, and most of us have our day jobs, but you can still have components to treat it like a business, even if you have a job. For me, though, just because I've invested so much into this and I thoroughly enjoy it as well, I really, really enjoy it. So for me, there is no plan B, and that's just a mentality that I have. I like to think of I'm the CEO of my family business. These folks are counting on me, and I'm providing for the people that I care about and love. So that helps me get into that business mentality. When the market opens, I'm on Eastern time. I'm in the Cleveland area. I just think, hey, it's time to go to work. This is my job. This is my business. So I'm going to act like it. I'm going to take this really seriously versus just treating it like a hobby. And then having a business plan, right? Knowing what your strategy is. And if you're working with Mike exclusively, or you have your own strategy that you've tested and are confident in, you can, what your trade size is, when to increase it. You might have some longer term investments that aren't trades that you want to put some of your proceeds towards against. You might have a covered call strategy against those long-term holdings. You're aware of the time of year we're in and what's going on in the general markets. And then you also have expenses when you have a business plan. And I think this is really important too. The accelerator program would be an example of that, of course. And I think another component here of the P&L of our business plan is losses. Think about losses as an expense, because it's a chance to a losing trade is like it's an expense because it's an investment into learning. You can go back and journal about it. You can go back and look at the charts and say, what did I do something incorrect here based on my strategy and my rules? How can I learn from that? So I treat my losses as an expense versus, oh no, it's a loss. It's just part of sort of the R&D, so to speak, of my business. So treating it like a business, I think, in my opinion, is very, very important, because otherwise I think you're just going to get hobby results and you may get frustrated. Some key mantras. This is the last slide I have here. I want to share these. I have tons of mantras that I've learned over the years, mainly through reading, and through a very select few newsletters I subscribe to. This one is probably the one that resonates with me the most. I actually think this came from, Mike, you can correct me if I'm wrong, I think it came from Jesse Livermore in Reminiscence of a Stock Operator, some derivative of that. But the smart person knows what to trade, the wise person knows when to trade, the expert knows when not to trade. And this goes back to the JOMO concept. I think it's super important. This goes back to my patience and my discipline, part of the formula to build my confidence. So I think that's super important. Getting into trades out of boredom. Exactly, Caleb. Another good analogy there for sure. Getting into trade because you're bored or it's not meeting your strategy typically never works. And if it does, it's probably luck. There's always another bus coming. And this is an abundance mindset, not a scarcity mindset. The market gives us so many opportunities. I mean, and Mike scours, tons and tons of stocks, and only a few of them make it to, that watch list that we really pay attention to, because he knows that this is not, there's going to be another train coming, another bus coming, right? It's an abundance mindset. And that's very important for me as an intraday trader, right? So I know whether it's an hour from now or even tomorrow, there's going to be another setup that comes. So there's no scarcity of opportunity in the market. Losing and being wrong are inevitable realities of trading. So this is really a big Mark Douglas component. Mark Douglas, if any of you know, is famous. Unfortunately, he passed away, but is famous for his book Trading in the Zone. I recommend that book to anyone. It's phenomenal. So losing and being wrong are inevitable realities of trading. If you have a system that works, it's all about probabilities. So there's nothing wrong with a loss. In fact, a loss should get you closer to your next winning trade. I'm rigid in my rules and flexible in my expectations. Oftentimes, amateur traders or beginning traders are just the opposite, right? They're very rigid in their expectations. They want to make money, and then they're flexible in their rules. They're changing the rules because a trade didn't work. So they'll look for another strategy or make some fine tweaks or add an indicator or what have you, or a time frame, and look for ways to try to get closer to making money. So rigid in your rules and flexible in your expectations, I think, is a really important mantra to keep aware of. I continually monitor my susceptibility for making errors. And this is a lot through journaling, reviewing all my trades, and also doing some practice. I do a lot of simulation work as well. So we've been fortunate enough to have a lot of tickers on the watch list that Mike has provided us. You can just look at some of those tickers throughout the day, and you could almost do prediction work. You can almost say, I think it's going to go here, and you could read the charts, and that makes you better, just like an athlete practices, before games. So, and then journaling, of course, recommend that to anyone. Like I said, my recording is really supplementing my journal ability, to hear myself through the trade, or when I'm looking at the trade or the charts. You can even do that if you're in a daily trade. You can record yourself for 5 minutes after the market closes and just talk yourself through what the trade did that day. And then last thing here, I think we're blessed to have someone like Mike, Mark Douglas, Gary Dayton, Mark Minervini, who obviously was a mentor to Mike, I believe. You know, they have the experience and wisdom when it comes to mindset. So the fact that we have these individuals, you know, at our disposal, and one right here, I think is really, really important and really valuable. You know, the best way to know the way to go is to ask the person coming back, right? I mean, it's and these all these people on this list, plus dozens others, they've all been there. And, you know, again, I'm only year 5, and my equity curve is nowhere close to where I would love it to be, and I have to put in the work, and I continue to do that. And I stack these habits every single day just to try to get 1% better. If I can get 1% better a day, that adds up in, you know, a month's time, a quarter's time, a year's time, and then a lifetime, of course. So, you know, again, these are just some of my, I know I didn't want to take a ton of time, but I just wanted to share some of the elements of my journey, but really emphasize, like, mindset it's the biggest part of the equation. And I think if anyone denies that or dismisses that, it's going to unfortunately rear its head in some ugly way. But thanks, Mike, for letting me have a few minutes there.
Yeah, absolutely. That was great. Thank you so much, Eddie.
Sure.
You guys have any questions for Eddie on anything that he said? Any points on the presentation? Or Eddie, I'm curious. What was your biggest takeaway in doing this exercise?
It actually wasn't that difficult to put it together because of just all my journaling and note taking, you know, from my mentors over the years. And I actually have TPOS, which is short for Trading Psychology Operating System. I have that written down in front of me every day. So I review it every single day. I didn't share with you guys everything that's in that. So it's almost ingrained in my mind, Mike, at this point. So to put it down into a little, you know, 5-slide presentation was relatively easy. But I'm also a firm believer when one teaches to learn. So to the extent that I'm mentoring a young person right now, you know, a Gen Zer who has a strong interest in trading. I'm mentoring her right now. And so I'm finding myself just learning, right, as I teach, which is so amazing. I'm sure I would imagine you feel the same way, right? When you could teach something, you learn too, you know?
Yeah.
So any chance I have to share my journey and my thoughts and my process, I'll take advantage of it.
Absolutely. Yeah. And well, with that the floor is open to anybody else who would like to come on, give a brief talk, pick a topic that you'd like to cover. It could be anything that's trading related. So it could be something mindset related. Maybe you're walking through a past trade. Well, whatever strikes you, whatever topic strikes you, reach out, and we'll be able to carve out 10-15 minutes or so. Like Eddie just said, it's a great way to really cement the education for yourself and for others too. So, Eddie, you there were a few notes that I took a whole index card here full of notes with that. So JOMO, I thought that was fantastic. Mindset being 95% of the equation. I actually think that Van Tharp called it 100% of the equation, because if we have a belief about if the market's 100% beliefs, then every action that we take is driven by a belief, and therefore the whole thing is belief driven. So that recording the audio, I thought that was brilliant. That's gold, and I think that's something that I plan to write more and talk about it, and talk more about in the group too, because that right there, if you're recording, to journal is one thing, and I think journaling is fantastic. Personally, I've never done an audio version of journaling the way that you described it, but man, oh man, is that brilliant. Because if you're recording the audio, it's capturing tone, it's capturing inflection, it's capturing cadence. How much of communication is the actual words versus the body language and the tone and all that other stuff, right? So you
100%.
capture so much more, and it's so rich. But like, absolutely do that. Eddie's on point with that. And I'm glad that you mentioned the authors later on too, because I was going to say, well, what was that Gary's name? So Gary Dayton, and the book was Trading Mindfully. Is that right?
That's right.
Yeah, perfect.
Amazing book. Amazing book. I will say it's very academic, unfortunately, at times, but awesome things in there. That's where I got the ultimately about our brains are naturally wired against us when it comes to being traders.
Awesome. Yeah, that fantastic job. I really appreciate you coming on and sharing a bit with us.
No, my pleasure. And I will say to hit on your point, Mike, about recording your thoughts during a trade, or again, if you're on a daily chart and you're in it, sometimes 2+ weeks, 3+ weeks, you can still record yourself at the end of the day by seeing what happened after you get home from work or whatever. I mean, it's been an absolute game changer for me, because sometimes I'll say things that I didn't realize I was thinking at the time. And I go back and listen to where my mind was at, or what I saw on that chart. And I can interpret that, and I can just get better. It's almost like it's the exact equivalent of an athlete watching game film. Right? It's the same exact thing. I mean, every single athlete we know of, right? Whether they're famous or not. I mean, whether it's my kid playing lacrosse or, or LeBron James, I mean, they're watching game film. Right, to get better. And that's very similar in that regard, but we get to hear our voice too.
Yeah, totally. Like, how many times I'm thinking of, like, how many times did I go and write down something in a trade, but if I had spoken it out, you could tell that, like, it's very easy to tell when you're confident, when you're hearing somebody speak versus when they're not confident.
Absolutely.
Or if you're reading it, well, who knows? Well, if you really worry or not, that a really great way to capture the subtleties in there and be able to pick stuff out. Solid. All right. So thanks again, Eddie.
Yep.
On. Hello.
This is my trading buddy here. So
there you go.
Let me take my AirPods out.
Hi,
so
welcome.
he can hear too.
Is that Micah?
There you go. Now he can hear. So he's learning how to trade too. So
That's awesome.
And he's homeschooled, so he's here all the time. So he comes in just after lunch. Well, it's just before lunch now, but we got to check the status of his trades. So
that's awesome. I love that.
He's
amazing,
up about
amazing.
He's up about 10% month to date. So
what's his name, Caleb?
This is Micah.
Wow, my son's name is Micah as well.
He can talk.
Hi, Micah.
Hey.
He's not usually
my son's a little older than your Micah, but nevertheless, his name is the same.
He's 9. He'll be 10 in August.
There you go. Mine's 19.
Very good. Hey, I think that it's great that you're getting started young, Micah, and I think that it's great that you're doing this with your dad. It's fantastic. He's doing amazing. From what I hear, you're doing amazing as well, and keep going.
Yeah.
You tell him what you want to try to get with your earnings this week?
A $40 Rubik's Cube.
What's special about the Rubik's Cube?
It's GAN, which is just a really expensive speed cube brand.
Well, there's more than it's just really expensive. That's not the part that we wanted to know. But
well, it's a really good cube. It's magnetic. It's like
how fast can you solve it usually?
30-40 seconds.
Wow.
Yeah. He's been obsessed with the Rubik's Cube the last month or so. He learned how to do it, and now
that's awesome.
That's
I
amazing.
still haven't figured out the Rubik's Cube. But anyway.
Very cool.
Dad, all you need to do is look up a tutorial on YouTube.
Yeah. We didn't have YouTube when I was your
That's
age.
all it takes. Okay, ask the creator of Rubik's Cubes.
Oh, awesome. So, all righty. So let's transition here, and let's start with a question. So have you ever seen someone else's trade or maybe their setup and suddenly felt doubt about your own? Anybody ever feel that way? I've felt that way many, many, many times, going all the way back to even when I was in the New York City IBD meetup. So when I was first starting to get my feet wet there, meeting the leaders at the time, just learning the process, seeing what somebody else is doing, getting some feedback, and even like starting to see, well, this guy's doing it this way, that's a little bit different than what I'm doing, and then starting to play the comparison game, maybe even at a subconscious level. But even before we dive deeper with that, I want to ground us in something that's been speaking to me a lot personally this week. It's actually a line from scripture. It's from when Jesus was talking to Peter in John, in the Gospel of John. Peter was looking over his shoulder and asking, "What about him?" And Jesus turned around to him and said, "What's that to you? You follow me." To me, that hits deep. It is, especially when it comes to this trading part that we're talking about here, because comparison is so sneaky in trading. We're not just tracking our trades, where at times we could be tracking everybody else, but the call is really still the same. It's, what's that to you? You follow me. I think that that's where our edge starts. It's not in trying to copy somebody else's system, but really following the path that we've been assigned or have been given, and faithfully and intentionally following that. I've coached a lot of traders through the years, many who were rock solid in their approach, and then they see someone posting about a 30% win or a 50% win or something else from a completely different system. And then next thing you know, they're changing everything in the middle of the week, and they're in what's commonly known as system hopping and not even realizing it. And yeah, I've been there myself many a time, and it's not a good place to be. It happens to all of us. It happens to all of us. The truth is, it's not what you saw, but it's more about how you interpret it. So I think that there's three main triggers to watch out for. Number one is comparison mode. When we see somebody else posting about gains, or somebody else posted a trade, and even, sometimes we might be on social media. Sometimes maybe we're tuned into the news, or maybe we're just in a group, kind of like this, where we're all, or at least many of us are trading similarly. I know that some of us trade different systems, and that's perfectly fine too. The main thing is what we mentioned earlier, in following your own system. But the comparison mode could really start to creep its way in when we start to think about, well, their system must be better than mine because they're making money right now and I'm sitting on my hands. Maybe I should be doing something. Here's a mentor or somebody that's aspirational. For me, at times, it's been like seeing somebody in the IBD meetup, right? Or seeing what was posted in the IBD newspaper, or even seeing something that Mark had posted about on Twitter way back when, and just seeing like, wow, like they're making moves. Maybe I should be making moves and try to play catch up. It's very subtle, because part of us is telling us, oh, you're learning and you're trying to do this, but there's also a component there where you could be in the comparison mode, one of the ways that I go about separating the two is education is at one time, studying education is at one time, executing is at another time, right? So if I'm in the middle of a trade, I'm in execution mode. I'm not in trying to study what somebody else is doing and try to making tweaks on the fly. That's what some call Monday morning quarterbacking. That's not the place that we want to be. When it's time to execute, we need to execute based on the plans that we've come up with, following that business plan like Eddie was talking about. When we're in education mode, think about that like when you're doing your post-analysis work. Right? Well, when you're reviewing your journal, figuring out, well, what went right, what went wrong. When I'm listening to that journal, right? Well, maybe later on when you're listening to that journal, did I really feel confident when I was placing that trade, or did I sound a little bit hesitant there? And okay, maybe I was a little bit hesitant there. Well, why might that have been? And then you could start to dig into, well, what was going on in the market at the time? Were you on process or off process? And that's how we could start to fine tune and start to get out of the comparison mode. Another trigger to watch out for, imposter syndrome. Right? I think that this is another one that we've all found ourselves in at some point as well. Maybe the question that we ask ourselves is, maybe I'm not actually good at this, right? Or maybe I just got lucky, right? Maybe I just put on a couple of trades and hit it out of the park, and maybe this is just like a one-time thing. No, imposter syndrome. So how do we start to get out of that imposter syndrome? One of the ways that I get out of this imposter syndrome is to start to think of, well, to think of a couple of things. Number one, is this really me? Is this really me? Is what I'm doing matching my goals? Is it matching my time frame? Is the action that I'm taking mapping to the plans that I've met? Yes or no? And if they are, then I'm more in alignment. I'm more in process. I'm more in flow. But if I ask myself that question, I'm like, well, I actually don't have much of a plan. I'm just kind of following somebody else. Then maybe that's something that's starting to shine a light on some additional work that needs to be done. Then there's the third trigger to watch out for. We call it shiny object syndrome. Maybe I should be doing that instead. When I remember when somebody came into, we had an outside presenter come in and talk to us at one of the meetups, and this was actually one of the reasons why one of the leaders was saying, well, we really don't want to go, well, what he would call too far off the reservation, meaning that when we had the IBD meetup set up, well, we were all just really focused on Can Slim. We didn't really want to branch too far off of that and start to introduce things that were not in O'Neill's book because of this right here, this shiny object syndrome. Maybe I should be doing that instead. So when we started to hear about things like options and spreads and those kind of things, not that there's anything wrong with any of that. If that's what your process is, if that's what you're doing, absolutely wonderful. But there's a difference when you have your business plan and you're working on executing your business plan, and then all of a sudden, like, you hear about this other thing that's making some money over here, and it's like, oh wow, that actually sounds pretty interesting. And then you start to test it out, right? But in your testing, are you doing it in an intentional way, or are you not, because if you're not, then it's almost like saying your business is closed for the day or for however long it ends up being, and now you're off here playing with a hobby, right? Like if you were operating a business, right? Like name a business, and all of a sudden you just shut your doors and you find that the owner is off doing something else. Well, is that really the kind of business that are going to be getting a lot of clients? Right? Well, like that business is probably going to be out of business pretty soon if that's the case. Now, it's different if you're the business owner and you have your hours of operation, and then after hours, you go off and you explore that other idea. That's perfectly fine. That's something that could actually enhance your business, but not if you're doing it in the middle. Does that make sense? Does that make sense? Yeah, I see a few nodding heads there. All right, so I want to bring this home with a couple of quick questions here that I'd like you to reflect on, and then we'll open it up to Q&A and cover whatever else that you guys would like to talk about in the remaining time that we have. So, what's something that you've learned from another trader that's inspired you without making you doubt your own system? What's something that you've learned from another trader that's inspired you without making you doubt your own system? That's the first question. The second question, what's something that you've seen that did shake your confidence? What's something that you've seen that did shake your confidence, and how would you reframe it now? Your confidence is your capital. We should guard it like our life depends on it. We must sharpen it over time. I think that it's important to learn from others, but never let someone else's system steal your edge. That's how you keep growing while staying grounded. So let's open it up. Well, what do you guys have? Comments, thoughts, questions, other things that you'd like to talk about?
I had a thought on the first part of that question, which trader inspired me initially. It was Mark Minervini, because he articulated and quantified risk in a way that made it seem like, oh, I don't have to be the most expert chart reader ever and completely understand this because you've got the system behind it. And this was, my technical reading is a little bit better, but it was before I had any kind of confidence in that. Even after reading the O'Neill books and looking, I didn't quite have that level, but he made it so, oh, you can build this, manage your risks so that you can keep building without just destroying your portfolio. And the way it was quantified was inspiring to me, that I can do this. It's not a magic art necessarily. So
yeah, awesome. Yeah, and it's really, it's not magic at all. It's math, right? Like, well, once you've got the math down, it works. It works, and then it's a matter of sharpening that edge. But if we trade in a way where the math no longer works, right? Like we need staying power. If we drift into a style where the math no longer works, meaning that, like, if we drift into something where we could either blow ourselves up, so take ourselves completely out of the game where we can't, because then the compounding is gone, right? Or if we maybe we don't blow ourselves up completely where we're down to zero, but we have such a major drawdown where now all of a sudden we've got to dig out of a major hole. That's no good either. Slow and steady, and then the compounding takes over, right? Because once the compounding starts to take over, then all of a sudden you can have what was like, oh, well, a 5% gain. That doesn't sound like whole much. But yeah, like after you've compounded and then you have a 5% gain, that's huge relative to where you started from, right? That 5% gain for like a year from now, 2 years from now, 3 years from now could be a 40% gain from where you're at today. And that's the magic of compounding. Excellent, excellent. Well, what other thoughts, comments, questions you guys have?
I just wanted to say I really appreciate Eddie for sharing that and being vulnerable and putting that together. I thought it was fantastic. A couple of things you said really hit home for me. I always feel the pressure of like being the finance guy for the family, but kind of what you said like inspired me. Made it more like a positive light than a responsibility. And I love trading, but it just put it in a whole different mindset. And then also looking at losses is just part of expenses. It kind of takes the sting out of it. One thing I only follow, like as far as like people who I learned from, I always go through like my Twitter feed every couple weeks and like, does this person bring me value, or am I just reading stuff that is meaningless to me? And if they don't bring me value in some way, shape, or form, I get rid of them. So I have a really small list of people I follow, and almost all those people have, either worked in professional trading firms or been doing it for a long time and are vulnerable and upfront with their challenges and their losses, which makes it real to me. And like, okay, these people struggle also, and they're pros. Gives me confidence. And then I remember one thing. I think I was reading a book by Eve Babich. I can't remember if I'm saying her name right, but she said that she builds trust in herself by following her rules, which I've really been trying to do is follow my rules. If I follow my rules, I do pretty good. But when I get an impulsive or emotional buy, then I don't do so well. And so like just this morning, I was writing down, well, what makes a trade impulsive versus strategic? And I really found out that like if I'm listening to somebody in the moment, then I just react because I get that emotional dump. Oh, I got to buy this. And then, I go back the next day or 2 days and I'm like, what was I thinking? And I wasn't, right? I just reacted. And so that's kind of what I'm really trying to do.
That's awesome. Thanks, Andy, for the kind words. Your insight and your absorption is spot on. I completely understand what you're saying about feeling pressure as sort of the finance leader of the household. I've been there a lot. And it causes me to do things that are on the brink of being irresponsible, right? Yeah. And so I've had to really check myself and really just read those mantras that I shared with you on a consistent basis, and really value someone like Mike Lamoth and what he's been through. And so, yeah, I totally understand what you're saying.
Yeah, the mindset part of it is so crucial. Well, like in the book, I wrote that one of the things that I used to do was begin the day with meditation and the whole Headspace app and everything. I still think that meditation is fantastic, but what I've done more recently over the past probably about year and a half, maybe closer to 2 years, is it's more about prayer. I think that prayer helps to. It's the way that I view it is it's more like focused meditation, because if I'm guided in this direction that I believe is the truth, and I'm focused on that during this meditation, then it's centering my mindset to go where it's supposed to go. And so that's why, like in the chat, I shared a couple of prayers that I begin my day with, and like before I really turn on my computer, I'm sitting there and getting centered with the 7 daily prayers that I have written out, and the scripture passages, and then that most recent one that actually took like a lot of what I was thinking and going deeper out, and then co-wrote that with GPT for myself. So that was a really cool thing that I was able to spit out, and it's just like, man, this really hits home, hits very deep. That builder's prayer. And so when I find myself anchoring that in and reflecting on it each day before the day begins, I'm able to align better with the Lord, and it helps tremendously. Having some sort of a routine like that, even if you're not a spiritual person, and I would encourage everybody to explore that if you haven't already. But even if you're not, having something where you're focusing mindset, just like how Eddie said, just like how others have said already too, like to center yourself in the beginning of the day, helps to set the tone for the rest of the day, gives you that anchor point. Eddie, earlier you had mentioned that you trade intraday. How does it feel to be among a group that's primarily doing something different as far as the tactics go?
Yeah. Yeah, you and I shared a message on it, a week or two ago. It's a little challenging for sure. Intraday, just listen, I've been critiqued about it, and I've been also somewhat applauded about it. You actually told me when we spoke once that, hey, if that fits your personality, then good for you. Lean into that. And that's just my personality. A part of me would love to trade the bigger charts and be comfortable with it. But the market's open for 6.5 hours. So that means how my mind works, there's 17.5 hours there in my mind of uncertainty. And is that a handicap of mine? Maybe. I don't know. I like to be in and out of the trade as long as I execute it according to my plan. And I just like to do that quickly. That's just me. It's not a strategy I would recommend to anyone that's just getting going by any stretch. Like, no way. Because talk about the probability of blowing an account quickly. If you're not managing your risk, that could happen literally a matter of minutes with intraday. So when I think intraday, by the way, I'm thinking of trading on an hour or less time frames. Right. So it's just what fits my personality, and I really enjoy it. But I'm very, I try to be as, and I'm not talking about scalping necessarily, right? I'm not talking about scalping and just trying to get, 4 cents on an option premium. I'm talking about, this is my setup. This is what I'm looking for. I'm reading, we have an acronym called ATCAT, which stands for all the charts all the time. I'm reading all the charts, and I have a plan, right? And I make sure my risk reward is at least 2 to 1. And there's room to get to that reward. And I cut my loss quick. So, instead of doing, maybe 2 or 3 trades a month, I could easily do, 3 to 4 in a day. So that's definitely a different strategy, but it doesn't change the fundamental aspects of mindset. Right? You still have to have the fundamental aspects and appreciation of psychology when it comes to trading. So whether you're trading intraday or even, a swing trader using the weekly for that matter. So just what fits my personality, Mike, to be honest, and I'm comfortable with it. And so I'm leaning into it, and I'm trying to become as best as I can be. And by still being coachable though, and learning, and from folks like you, and reading, and my mentors and my friends, peers, etc.
Oh, that's great. And I would say too that, it's definitely not a handicap. It's just simply reflective of where you're at. And there's nothing to say that you might not change at some point down the road. if you remember in the mind wheel, I spoke about day trading and how I did that for a while, and well, I actually had the best return that I never would have dreamed about having that kind of the 14,000% return. Like that just seems like something that you would, somebody just made that up. Like I had to like do
Exactly.
double take it, the triple take it, just like double check the account. Like, is that actually true? And yeah, like it was. But well, why change that? Somebody might say because the way that we remain effective is by allowing ourselves to trade where we're at in our lives. So then and this is where you're at right now. So this is working well for you. That's awesome. You continue to do it. Get it, like get those returns. Nothing wrong with that at all. If things change, a lot of what you are doing presently, I would wager that a lot of the system that you have could be expanded into something else later on, right?
Yep.
It's just a matter of figuring that out.
Absolutely.
But yeah, trade what works for you, right?
Yeah,
Like
and
that.
I don't want to stare at charts all day either, right? So I might just trade a little bit in the morning if something's there. I'm not going to force anything if it's not there. And I only trade one particular ticker, which is essentially the market. So I'm not looking at a big watch list right now or things like that. And I have my long-term holdings as well, and I look for cover call opportunities on those, which are obviously longer in duration. So yeah, it just fits where I'm at, my personality.
All right, cool. Any final thoughts?
This has been good. I really appreciate it. Like I said, I think Eddie sharing the psychology part's fantastic. It would be interesting. I don't know, maybe Mike, you have this somewhere on your site, but all the great books people have read on psychology. I mean, I have my list and some of my stuff that I read, and I mean, there's also great podcasts out there too.
Great podcast.
Yeah.
All right. Yeah, well, we could definitely get that going. People have posted in the book club resources, but after after we hop off, I'll post something to say, hey, drop your top 10 favorite trading books or whatever number you want in there, and then we'll be able to build a repository for the group. And we could do the same thing with podcasts or other education. Yeah, I think that'll be good. All right. So if anybody else, like I mentioned earlier, if anybody else would like to come on and give a little bit of, give a talk, 10, 15 minutes on the next one, please reach out. But that's also an open invitation too. If you're not available next time, or if that's too close, we could schedule it 2 weeks out, 3 weeks out, just whenever you feel inspired. Reach out. I think that this was good. And again, Eddie, thank you. You did a fantastic job.
Thank you. My pleasure.
All right, everybody. Well, I'll let you all go. It's been a pleasure again, and I will see you guys in the chat.
Right. Enjoy your weekend, everybody.
All right. Have a good weekend, guys.
Bye, all.